Just a review of the trade from today, 5th of June, for the micro E-mini S&P 500 futures contract during the New York session. This morning we did have high impact news, which was pretty good news, and the market just rallied right from the open. If I was a breakout trader, I could have traded the breakout, but that's not my style. Instead, what I did was, again, you can see this entire session on YouTube. I've posted my entire live stream. Market rallied up, waiting for a pullback and for price to create some sort of resistance or support, sorry, here. Create some sort of support for me to scalp a quick position. If I go back to the beginning of the stream, analysis here, this is what I was expecting, but the high impact news really pushed the market and it just broke the level without giving a retest, which is fine. So I'll go to the point. So here I was waiting for a pullback, and I got confirmation on the 5-minute chart that the bulls were coming back in. Wait for that candle to close and then started measuring my risk. Okay, so here you can see the candle closed bullish. The current candle here pulled back a little bit, and that's when I entered the trade. I don't know why I looked at the 1-minute chart. Not important. Still waiting for, I'm just seeing how price is reacting to this level. So here's a long position. I'm now taking my profit target down, adjusting my stop loss. Price does move against me quite a bit, but it's not too much. I would have closed the position now if it retraced too deep, because that would just tell me that that previous break above the candle was a fake out. My reasoning behind this stop loss is that if that 15-minute candle turned bearish, then I wasn't willing to hold this trade. This is a very small single micro E-mini S&P 500 contract, so the risk is fairly low. Could hear the market starts pushing up again, broke the previous candle high on the 5-minute, and now I'm tightening my stop, because now if this candle turns bearish at this point, it's unlikely to retest that high anytime soon. Alright, so I've closed out my position. In hindsight, I should have just let it run, but I've had this problem before where I tighten my stops too soon. What I should have done is place my stop below the low of this current candle, because what you will see now is that market does breach that high, the previous structure high, but my stop was far too tight that I would have got stopped out before he reached that structure. The ideal thing to do would have been to leave my stop loss below the low of this candle and let this retest and breach that previous structure high. Let's forward this a bit. See, this is what would have stopped me out if I kept my stop loss at break even and kept my profit target as at the previous structure high. I would have been stopped out here only to see the market retest. This is why I need to stop tightening my stops too soon and too close to the current price. Profitable trade regardless, could have done better. So next week I'll have to review what I'm doing and keep my stops at logical levels and not emotional levels. I'm going to post another video of the lessons I've learned this week and what I can do to improve my performance next week. But this video itself is a really easy scalping technique. You just wait for the market to rally, stick to reasonable time frames, wait for support to be formed and ride the trend. And the same thing if the market was dropping, you'd want a pullback and resistance to be formed and then take a reasonable scalp. That's all there is to it. You can see this whole session live on YouTube. I've posted my entire live stream there. Not as much commentating on that video, maybe at the start, explaining what I'm expecting from the market. But because I'm working during the day and I've got meetings, I'll struggle to commentate for the entire session. Hope you guys enjoyed this video, and if you do like it, then please do leave me a thumbs up. And if you have any suggestions, then please do leave it in the comments below. Thanks, guys.